All right. Well, good morning, guys. This is going to be, I'll apologize, kind of quiet. No screenshots of anything colorful or lovely. But what I was going to talk about today is obviously with COVID-19, we're all going through changes. Every business is having to change, and Members Cooperative is no different. So some stuff that we've seen change in the industry so far is we've seen the programs are still the same, but probably one of the biggest changes is some of our investors are allowing exterior only appraisals because obviously they want to keep the housing market going, but not putting the appraisers in danger. So they can now do all their work from home and come out and take a few pictures and give us a value on that property. So that's probably one change that we've seen that's the biggest, because usually they always want to go inside, make sure there's no damage to the interior or anything that would negatively value the property. But that's one. And the other one which is kind of becoming a little tricky is right now, usually we would have to verify that the borrower or borrowers are working 10 days before closing. We just have to do a quick verbal verification of employment, make sure they're still working, which in the past has never been a problem. But right now, we have to do it the day before to make sure they're working. And some investors want it the day of closing. So obviously with the changes of people getting laid off and stuff like that, so that's kind of becoming an obstacle. Now with Blandon announcing its temporary shutdown, that and the mine shutting down and stuff like that, that will probably change a lot of people's minds or give the availability for them to move forward on doing either a refinance or a purchase. Obviously, as Lori knows, our closings are different. My number one thing that I've always done for my members and clients is I attend the closings, and not a lot of loan officers do that. And that was one thing that I've always said I'm going to do, and just to be there to comfort those, especially those first-time home buyers. It's a big decision. They're borrowing a lot of money, and I just always felt that somebody should be there to represent them in that. And it's kind of hard for me now because I can't do that. Lori won't even let me come in anymore. And some title companies are actually closing them in the parking lots, and they're closing by telephone. And then they just come out, and it just, to me, I'm glad things are still moving forward, but to me, that closing is supposed to be a special day. And when you do it in your car, to me, it feels like you went to A&W and got a root beer float. So some changes there, but I'm glad that everything's going and we're going good. Other than that, it's the products and stuff are still there. We still have your regular conventional, your FHA, your VA, your RD, and then obviously our number one program that we have that's been just going gangbusters since last year is our first-time homebuyer product. With that product, it's I'll give you a little refresher. It's a 2% down. The rate can be, right now, it's anywhere from 3.5% to 4%, depending on credit scores. It allows the seller to pay for up to 6% of purchase price towards their closing costs. So there's a lot of people getting in this program and doing this, first-time home buyers. And what declares them a first-time home buyer with this product is they cannot have owned a home in the last 3 years. So, but with the 6% down from the seller towards closing costs, a lot of people are getting in the homes. $100,000 home, they can get in for $2,000. And it's probably one of the bigger benefits with us with that product where all the other first-time home buyer products have mortgage insurance, which can be anywhere from $500 to $150 a month added to your mortgage payment. This product, we don't offer mortgage insurance. So it automatically is going to save that borrower some upfront money, which will be going towards their principal and interest right off the get-go. So it's very great. They do have to do a online version, and that's another thing that has changed. We used to require some people to go to the like Kutaska or something and go do the home stretch class in person. But currently right now, everybody just has to do that class online, which is free. And we send the link out. It probably takes some people an hour, could take some people 5 hours. Everything's different for people, but it's a great product. And that's probably been I would say one of our largest successes there at Members Cooperative for the last, over the last year. The other thing, obviously, for us, our lobby's closed, so we don't get to see people come in. And not to be a Scrooge, but right now with the way business is, I kind of like it because it's just business. You know, you get there, you can get to work right away and get everything done throughout the day. So if anybody has any questions, or even if people are, of somebody buying a house and they're confused and they're with another lender, I've always told myself that to reach out to me. I'm more than happy to help them, even if they're not using me, because it is a big decision. You're going to go into some debt, and I just want everybody to feel comfortable and with these trying times, help them out however we can. So, how much time I got left, Wayne?
Well, you got plenty of time for questions. So, and I know there's some questions lurking out there. So, let's get after the questions for Tim. Okay.
I guess I can repeat the couple I had. One of them was some people are making more on unemployment now than before. Would this help them at all in the loan process?
No, it doesn't. So I've heard rumors that there is some companies that are allowing you to use unemployment income during these times. Our investors have not okayed that. So basically right now, if we call and we find out one of our borrowers is unemployed or temporarily laid off or whatever, we cannot move forward at this time.
Go ahead.
And that might change as things continue to go. But I think what they're kind of hoping is obviously that in the next weeks or so, we're kind of everybody go back to work, hoping, that the world starts opening back up. So I think they're kind of waiting to see what's going to happen there.
And then I had another one. The house we live in now, my wife purchased it and it's in her name prior to us getting married. Would I count myself now that we're married as a first-time home buyer?
No, yes. So basically, if you're married, and let's say so the house you live in right now is under your wife's name only, and you've never owned a home, if you guys sold your house and you bought a new one, yes, you would qualify for that first-time home buyer because you have never owned a home. So one of the spouses has to never owned a home, and you would still qualify for the program.
So Tim, when you say never owned, you said within the past 3 years, correct?
Correct.
So
yeah, okay. So like if you
my
owned
house
a home,
was 5 years ago. So I and my husband, this house is in his name. So if we, for example, I would qualify for that.
Yes. So you and your husband could buy another house, and your husband could even be on the application and the purchase and everything. Mm-hmm. It's just one of the spouses has to have not owned a home in the last 3 years.
Awesome. Thank you.
Mm-hmm.
Tim has 1 minute left. So if you got a question, let's get it in there. Well, it looks like we're good to go. Tim?
All right. Thank you, guys.
Thank you very much. Yay, everybody. Yay.